In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Hi, and welcome into Eye on Retirement, the weekly show that keeps you in the know about all things retirement. I'm Rick Everett, along with Jonathon McCoy of Market Advisory Group. Welcome in, Jonathon.
Thanks for having me in again, Rick. This is going to be a blast.
We've got a lot to get to, so I'm going to just jump right in. When it comes to managing an investment portfolio, there are different styles of management. There's passive, there's aggressive, there's buy and hold, and there's also different ways that investment advisors charge for their services, whether it's commission-based or fee-based. And a question I have for you is, how many times have you sat down with a client or potential client that comes in to visit with you for a consultation, and you ask them the question, how much are you paying for your investment advisor services? And they have no clue as to what that answer is.
Well, it's the vast majority of the time. It's funny, most of the time I could probably ask people, I could probably even ask you, Rick, the same question about how much you paid for your last tab at the grocery store. Mm-hmm. Most of us will know that. We kind of know how much these things cost on an ongoing basis, but this financial services industry has become so good at hiding a lot of these fees behind, prospectus booklets that you're expected to read through every year. If you've got that 100-page booklet, or now it's just an email that will come to you every year to tell you what type of investments you own. But ultimately, it's going beyond just how much it actually costs for this financial advice or how much you've been paying your financial advisor. You have to be thinking about what is the level of service that you've been receiving. And oftentimes when we're comparing and contrasting existing financial advisors, existing portfolios to what we typically do for our clients here at Market Advisory Group, many people are finding that they're surprised that they've been paying the same, if not more, than they may pay for a more holistic service. Having worked with an advisor that does not have a tax team, that does not have an estate planning attorney, that does not have a Medicare team to go to for generally at no additional cost. And they've been sitting on the same investments for a long period of time as well, where you've paid this advisor sometimes ongoing fees year after year after year, and there's been virtually nothing done to make changes to your portfolio. Maybe some rebalancing or maybe some brief adjustments based on, okay, you're 5 years older now, let's become a little bit more conservative, whatever that means. But beyond that, there's a complete veil covering up what are the questions around tax management. How is this money going to work for you when you're retired? How much is it going to cost you to pull money from your retirement accounts since you've not paid taxes on it? What happens if something happens to you prematurely? Is your spouse going to be able to continue living at the same or lower tax rate? Is the investment strategy going to be appropriate when you're both still alive versus when there's only one surviving spouse? And then beyond that, what happens to the next generation? And investment management and portfolio management, that is a big part of the picture. But what we're finding is people are missing some even bigger parts of the picture, especially from a tax management perspective. But they're paying full service fees for a non-full service practice or advisor. And we're finding that hopefully we're opening a lot of people's eyes to that circumstance that you may be paying a lot for a service that you're just not receiving.
When we look at the buy and hold strategy, many of our parents told us throughout the course of the years, just ride it out, it'll come back. Mm-hmm. As a person is nearing or in retirement, by that time, is buy and hold perhaps a little bit dangerous?
Well, it can be, and I oftentimes, we've talked about this before, Rick, if you are able to ask the question, how much do you stand to lose during the next financial crisis, and someone can give you an answer, and they can tell you that, yes, that is a sustainable loss in my circumstance, then I would say you've got appropriate risk management. But what we're finding basically every time we talk to folks is they don't know how bad the worst case scenario can get because there's been no predictable strategy put in place before the next crisis. We don't know what's going to trigger the next financial crisis, whether it's something like what happened to the housing market in 2008 or a global pandemic that shut down the economy in 2020. We don't know how bad it can get or how long these financial crises can last, or these market crises can last. So if you can look at that and say, we know that there will be another crisis on the horizon sometime, but you can't look at your portfolio and say, well, I don't know what I'm going to do when that happens, then do you really have a plan? Or are you just, as you mentioned, buying and holding, just hoping for the best, hoping that you could ride it out, or maybe cut back on your retirement lifestyle for a long enough period of time that those account values will start to recover? To us, if the market is dictating your lifestyle, once again, we don't view that as a plan. We view that as really an upside down financial situation that you've left yourself in. And most of these financial advisors that work using a buy and hold strategy, I think, are selling their clients short, because there really is no strategy when the next crisis happens. And when you call your financial advisor saying, hey, I've lost a ton of money, what are you going to do? And the advisor comes back and says, what?
It's too late.
It's too late. Just hang on. Don't sell out now. Don't do anything. That means there was no plan in the first place.
When we talk about fee-based versus commission-based, with a fee-based investment group, you know what you're getting for the amount of money you're paying, versus on a commission base, you may have an investment advisor that's pushing you into one thing or another that is going to benefit him more. Correct?
It's possible. We talked in previous episodes, and we'll continue talking in future episodes, about the difference between the fiduciary standard or the brokerage standards, where someone is allowed as a broker to sell one product over another based on how they're going to be paid, or what kind of commission they're going to earn selling that product to you. As fiduciaries at Market Advisor Group, we are not allowed to have any bias, and if we are not keeping our clients happy, we've got to be proactive. We've got to be on top of it to keep their business, to keep them happy, to do things that are providing the services they expect. And it goes beyond just portfolio management. You can come and sit down, and we can spend a couple hours together, and we can draw up a very good, specific, personalized investment management plan that will fit your needs. But if we're not looking at also the tax management, the health insurance expenses and concerns, long-term, looking at the estate planning with our estate planning attorneys, if we can provide all of those services at the same or lower cost than most other financial advisors, and have a proactive investment strategy so our clients know what is the worst case scenario, and make that situation more predictable, it helps us keep our heads on straight through a market crisis. But we also know that there's not been a lot of these other potholes that have not been looked at, especially around the tax management space, that Market Tax Services and our team of tax experts is here to help with there as well.
Is it safe to say that Market Advisory Group is able to provide not only fee-based services, but a fee-based service that is probably right in line with others, but providing a whole lot more for that fee?
It's as with any other business, right? I use the analogies of, when someone's coming to work on your house, if you hire someone to come clean up the trees in your backyard, and they realize that, hey, there's been some damage on your gutters and maybe a little bit on your roof, and they go out of their way to recommend either someone to provide that service, or say, we can do that, we can help fix all of these issues. Isn't it nice when someone steps into your home and is doing that type of work, and they're able to solve multiple problems all at once? But if the roofer, contractor, whoever it may be, shows up and says, you probably ought to take a look at that tree, call Jerry down the street, I don't know what he charges, but he's done a good job for a couple other people. And then Jerry comes out, and it just becomes a mess. You got to become your own project manager. Well, we've seen that so many people that come to talk to us are in that position. They've been left with this, having to put their own plan together when they're paying all these other financial advisors all of these fees that are the same, in some cases more, than what we charge here at Market Advisor Group, and they're not receiving any of that holistic advice. They've got an incomplete plan because sometimes they just didn't know what questions to ask, and that's part of the reason that we're trying to get this out here on Eye on Retirement, and welcoming people in for one-on-one consultations is a key part of this process. We like to be interactive with the show. We like to be interactive with people online. If you reach out to us at eyeonretirement.com or call us at 316-252-8707, the number at the bottom of your screen, you can set up a one-on-one consultation. Our operators are standing by right now to take your phone calls, take your questions. If the questions are beyond the scope of what our operators are there to answer, they're going to set you up with a one-on-one consultation with an advisor. We're going to sit down with you, bring in our tax team, bring in our estate planning attorney, bring in our Medicare advisors, whatever area that you might have questions on. We're going to be able to solve those questions and get those answers to you in one simple meeting.
And of course, the consultation is absolutely complimentary. When we come back, we're going to take a look at the importance of risk management during all phases of life here on Eye on Retirement, and we'll be back right after this.
When people work with Market Advisor Group, they get a feel of sense of family. There's a lot of relationships that are made and going on in this conference room, and we really take a lot of pride in that and a lot of satisfaction in that.
Every client we work with, we make a custom-made plan to fit them and help reach their goals in life. And then another thing that makes us unique is we want to meet quarterly with our clients and have reviews.
Market Advisory Group, we have a process, and the process we take people through is first to understand what they have, understand who they are, and then we put together an income plan for them and show them how they can look forward to retirement and not look, though retirement is going to be a stressful time. It needs to be a stress-free time.
A few unique features of working with Market Advisor Group is holistic in-house financial consultants. We've got an in-house CPA, Joshua, an in-house estate planning attorney, Gerald, an in-house Medicare advisor, Bill. We rely on all of those professionals for, again, additional service within our consultative process, making sure that we've got the advice and the expertise behind the recommendations that we make.
You know, as an advisor, I'm not there to sell them one way or the other. I'm there to educate them, to let them know what their choices are. Then I try to help them make the right choice where they can save money and feel confident in their decision.
Absolutely the best part of my job is getting a stack of paperwork from somebody and they don't know what to do, and then I can turn around and give them back a tax return, but also to be able to explain what they can do next year that will give them a better answer than what they had this year.
When we've got clients that are calling and they need to help out a child or need to help out a grandchild or need to help themselves out and they're in a situation they didn't expect to be in, I really relish the opportunity to help them through that, help them make the educated decisions in somewhat stressful situations, because a lot of folks don't have that type of counsel.
We meet with so many people one-on-one in this office that don't ever end up becoming a customer or doing business with us, and that's okay. But when they leave our office, we know that we've helped them either get some answers to some of the questions they had or get some clarity on maybe their own path.
But one of the things that we hear all the time is, I wish I would have met you guys 10 years ago, because how much further could I be down the road? Well, Johnny Appleseed said, when's the best time to plant a tree? 10 years ago. When's the second best time? Today. And so if we can help people today going forward, that just brings an incredible amount of comfort and excitement for us to come to work every day.
Hi, and welcome back into Ion Retirement. I'm Rick Everett, along with Jonathon McCoy of Market Advisory Group. And if you would like to pose a question or to set up an appointment for a free consultation, please at any time during the show, give our phone number a call at 316-252-8707. Again, that's 316-252-8707. Jonathon, before the break, we talked a little bit about the fact that we were going to talk about risk management in this segment. And risk management takes on a different appearance at different stages of life, but yet it's important through all stages.
Right. Yeah, risk management is a direct component of or an after effect of how much time do you have between now and when you're actually going to be needing to use whatever pot of money that you're looking at. I get questions oftentimes of, I'm looking to buy a house, I've got $100,000 in savings, it's doing nothing at the bank, earning no interest right now, but we're needing this money for a down payment, within the next 18 months. Well, I would be very hesitant to recommend that anybody invest that money in the market, because what happens if the market drops in those 18 months? Well, if you stretch that out and look at over someone's entire working career, their lifespan, the time that they plan to spend in retirement, you can start to see what money is it most appropriate to have either more conservative or at least a closer eye on how much risk is being taken in different market environments, as opposed to the money that you may not be using for 10 to 15 to 20 years plus. I've seen so many buy and hold financial advisors that someone retires, they're in their 60s, they put them in a 50-50 stock to bond or a 60-40 stock to bond split, and they just let it run for a number of years. You get a little bit older and you just bump that risk down, right? It's all age-based. Well, what we find is that still leaves a big air of unpredictability in that we don't know how bad these market crises can get. The market can drop by 80%, it can drop by 50, it can drop by 20. And understanding how bad it can get for your money based on how you're investing it today is one of the first steps in our consultation process. It's putting your existing portfolio through a risk tolerance survey of its own. Yes, we like to know what your risk tolerance is, but how much risk is actually present if there is another 2008 style financial crisis, or what some people occasionally predict, what if there's another Great Depression? They didn't know or think that the first one was going to happen. We don't know or if or when another might happen. So how bad can it get? That's what we're trying to answer for our clients before we put a plan in place for them. Before that they're signing anything or agreeing to any financial management, we want you to understand, here's how much risk or how bad it can get in the worst case scenario in the market. And putting as much of that predictability in place makes it actually a lot easier for us as financial advisors, because we know that our clients aren't going to be reaching out to us saying, hey, get me out, this is too much. We've addressed all these things ahead of time, as opposed to coming up with a new game plan when the battle has already started.
So for every person that comes in and receives that complimentary consultation from Market Advisory Group, that risk analysis or risk tolerance, if you will, for each individual person is mapped out?
Yeah, 100%. I mean, my personal favorite area of the entire consultation process is that risk analysis and helping people, trying to open people's eyes to here's how much risk you're taking and here's how much risk you have told us you're willing to take. And then we can start to relate that to, okay, when we're putting this actually in plan mode, we're looking at how much risk is it appropriate to be taking on different portions of your money based on how you're going to be using that money and when you're going to be using it. Is it college savings? Is it something that's designed to be an inheritance for the next generation? Is it something that you plan to live on for the next 10 or 15 or 20 years, which is the majority, obviously, of our retirement savings these days? So just looking at the purpose, the time frame, how much risk, how bad can it get in a market crisis? And those are all the ingredients that go into planning in general, and also knowing that it's not just to set it and forget it. We're meeting with our clients in most circumstances 3 to 4 times a year. And the whole plan here is to make sure that there's not something significantly changing in your lifestyle, in your income needs, or in the market. That's the one thing that we're definitely least in control of, to make sure that we've got a game plan in place ahead of time.
So when should a person focus more on the worst case scenario?
I think when my partner Larry talks about it all the time. In this period of time that we call the retirement red zone, which is about 5 years before you retire and about 5 years after you retire, we need to be heavily focused on how much money is it important for you to preserve to get you through at least those first 5 years of retirement. How much money do you expect to be spending from your portfolio once you retire? You take your Social Security, maybe you're getting your pension coming in. How much other income are you going to need your money to provide you? And that can help actually determine these different risk buckets to help look at how much money should be conservative, moderate, aggressive, so on and so forth. And everybody's definition of those terms, conservative, moderate, and aggressive, is obviously going to be different. That's where the risk tolerance comes in, because conservative to me, Rick, is probably a little different than conservative to you.
Right. So when a person, as they're getting closer and closer to that retirement age, it would seem as if the whole set it and forget it, or buy and hold strategy, if you will, the closer you get to that retirement red zone, as you worded it, perhaps the least good idea that becomes of...
Yeah, the strategies need to change. And we see it... When we first opened for business several years ago, we were experiencing the first round of people that were retiring after having to delay their retirements from 2008. So we were 6, 7, 8 years in some cases after people had to plan their original retirement dates. So one thing I always say is, in the market, if you can't afford to buy and hold and ride it all the way down through the bottom or the valleys of the market, all the way back up to the top and allow your account values to recover, you've not lost money, but you have lost time.
Right.
The question is, how much more time are you able to lose between now and when you retire, or even shortly after you retire? Because if you put yourself in the position that you've bought and you held and it worked for the last 12 to 13 years because the market's just gone almost straight up, and then it decides to not go straight up for the first 2 or 3 years of your retirement.
Not good.
Yeah, what's the question? Are you going to have to go back to work? Are you going to have to try to find more ways to save money? Are you just going to have to not travel or do whatever you wanted to do for the first 5 years after you retired? Those are sacrifices we don't want our clients to have to make. So if you want to call 316-252-8707, we always welcome anyone to reach out to us anytime. That's how you get a hold of us, get a hold of our operators, and set up a one-on-one consultation. You can also reach us through ionretirement.com. By visiting ionretirement.com, you can submit questions. You can also request a consultation time also with one of our advisors and our tax team. But if you do relieve your physical mailing address, we'll give you one of our nice Ion Retirement coffee mugs here as well. Just be sure to leave your physical address there and we'll send that right to you. But once again, the phone number is 316-252-8707. We're happy to sit down and meet with you anytime.
And remember, those consultations are absolutely complimentary. We'll be back with more Ion Retirement right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. This is a $999 value that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have. By running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no-obligation, full-blown financial review today.
Hi, and welcome back into Ion Retirement. The phone number, 316-252-8707. That's 316-252-8707. And that's the phone number that you can call to set up a complimentary consultation with Market Advisory Group. I'm with Jonathon McCoy of Market Advisory Group, and we're talking about portfolio management in this segment. And it's interesting how other entities besides Market Advisory Group handle things that encompass retirement, because there are a lot of components. So a person can go to their investment advisor and get investment advice. Mm-hmm. Then they ask him a tax question. And Mr. Investment Advisor says, oh, go see Larry down the street. He does taxes. He's a really good guy.
Yeah.
So you're down there and you're talking to Larry and you're talking about taxes. And then you have a question about, well, how is this going to affect my Medicare?
Right.
And he said, oh, well, go see Brad down on Block Z.
Yeah, you're on a wild goose chase around town now.
All over.
Right.
And that's not how we do things here.
No, and there's a reason that we've built our operations the way that we have. It's because we kind of had to reverse engineer our entire process based around the questions that our clients are bringing to us that we couldn't, in the beginning, could not answer because we didn't have all of these professionals in-house. So as we're working to be better advisors every day, we also knew that we had to get better advice ourselves by bringing in tax professionals, bringing in the Medicare expertise, the estate planning attorney, to make sure that we could answer all those questions in the moment, as opposed to, yeah, go talk to this guy, I'll see you in a month. Then, life gets in the way, time gets in the way, and you don't end up getting the answers. But sooner or later, it's the end of the tax year, and it's too late to make a lot of these changes. So the all-in-one house, all under one roof concept with Market Advisory Group, it's birthed from the issues that our clients were bringing to us that originally we couldn't solve. But we had to make the investment in our clients to bring that knowledge to the table. And fortunately for a lot of our clients that knew us before we had Market Tax Services and the in-house CPA team, for example, their plans have gotten better, and we can show people on paper, just by having that tax advice right here, how much money we've saved them. And then we start looking, when we start asking people, how much are you paying your existing financial advisor for the advice that doesn't include tax services? Well, then the cost starts going up when you realize how much not having that tax advice is costing you just in taxes, let alone the advisory fees themselves.
I would imagine there are times and examples you could probably even list of just watching a client develop a sense of ease by knowing that they've got the guy right next to them to answer the tax questions. They've got the attorney right there to help them with estate planning. They've got the Medicare advisor who is able to guide them on supplemental Medicare issues. You've watched it unfold right before your eyes several times, I'm guessing.
Yeah, just the other day, a gal, well, a little bit of a sad story. Her husband had passed away prematurely this year, unexpectedly, and she came to us because she said she was actually used to be a financial advisor herself years ago before she retired, and said, I've been looking for a practice like yours for years because it's the way I wanted to be able to set up my practice, but the company I worked for, a big brokerage house, we all know a lot of these brand names nationwide, would not allow her to hire a CPA to work in her office. It was not in their business structure, so they just wouldn't let her do it. She always knew she should, but she couldn't because of her employer. So, we've met with our CPA a number of times, met with the estate planning attorney, met with Medicare advisors, and after the last meeting, we'd signed everything and she put her plan into place, and she said, you know what? It's the first time I've ever had one of these meetings, and I feel really comfortable walking out of here. And to me, it was surprising that as a former financial advisor, she'd never really had that experience, but then she went on to describe it's because I was never able to provide this level of care for my clients because of the business structure that was kind of hampering how she wanted to be able to run her practice. So, we reiterate the complimentary consultation a lot on these shows, and if you'd like to reach out to us at 316-252-8707 to meet with us one-on-one, you'll either be meeting with me, my business partner Matt, our partners Larry, advisor Danny Goolsby as well. Any of our advisors, any of our tax staff, come in, sit down with us one-on-one. You can also visit us at ionretirement.com. You can submit your questions there. If you submit your physical mailing address, we won't spam you, but we will mail you one of our nice Ion Retirement coffee mugs. You can reach out to us at Ion Retirement anytime or call us 316-252-8707. Our operators are standing by ready to set you up with those complimentary consultations.
We've covered a lot on this edition of Ion Retirement, from the different styles of portfolio management to how important risk management is in different phases of your life, and then also the holistic approach to retirement planning with Market Advisory Group for tax advice, estate planning, and retirement and healthcare advice. Join us again next week as we bring you another edition of Ion Retirement.
This broadcast is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issue. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or is excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. Legal services offered by Eidelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Investment advisory services are offered through Foundations Investment Advisors LLC, an SEC-registered investment advisor. This broadcast is copyrighted by Market Media Network. All rights reserved. Brought to you by Market Advisory Group. Invested in you. Call 316-252-8707. That's 316-252-8707. Or visit marketadvisorygroup.com.